All right, hello, hi everyone. Sorry about that, having some internet issues over here. All right, now great to have all of you join us this evening. So welcome to Cashflow Live with Terence, episode 2. Okay, so I'm just gonna take some time to set up because a lot of my platforms are not ready up as well because of my internet being cut off slightly just before I started the session. Okay, all right. If you're with us right now, just drop a note, say hi over here. All right. Okay. Hi, Uncle Fu. Hi, YC. All right. Hi, Said. Hi, Irene. Hi, Sonny. Okay. Thank you very much for joining us on episode 2 over here. So let me just quickly make sure I have my account set up, right, and ready to go. Give me a minute. Okay. All right, I'm ready over here. So let's get started. Let's get going. Thank you very much for joining me again for this evening session. So if you are with us right now, I'm going to start the session proper. So let me again address the aims and goals of this weekly episode and weekly session over here. Now, so the aim is really, really simple. The objective is to be an option seller. And our goal is to create cash flows over here with the trades that we take. And this session is catered really for any option seller, all right? Really any option seller. That means whether you are with our community or you're not part of our community over here, you should be able to follow the trades that I'm going to be discussing over here. If you have been part of Project Options Cashflow, something that we ran in the month of June, for the benefit of the general public to know about option selling strategies or basically options trading strategies. And on top of that, we discussed a portfolio building option strategy that people could use. So this Cashflow Live Weekly with Terence segment is really using 2 simple strategies to begin with. One, we would start off every position by selling what we call portfolio naked puts. Right, so we're keeping things simple in this series. That means we are only going to do what we call cash secure puts. So cash secure puts, in case you're not familiar with, it's basically selling a put option, right? But setting aside the total cash amount needed, right? If you're actually required to buy those stocks, right? Should anything happen, right? Now, so this literally means that you will not be faced with any margin issues or margin calls. Okay, because if you're not part of our community, you may not know how to handle this situation. All right, so one of the safest way to be an option seller is to make sure that you have the cash ready sitting in your account to take on any obligation that comes from selling options over here. All right, so to begin with, again, selling put options is making a promise or commitment. Making a promise or commitment to the customer. That means the buyer of the put option to be obliged to actually acquire those shares, all right, from the strike price that you're selling on the put option. Okay, so what we are doing over here is first pick out a good fundamentally strong stock. Okay, and then once we have the stock in play, okay, we start identifying what would be a good purchase price for those stocks. So if the stock price is much higher right now, what we want to do is we want to sell a put option to take on an obligation to buy those stocks. But effectively, we're actually trying to get someone to pay us upfront to take on that promise over here. Okay, so what we're trying to do is to create cash flows right from the onset, even before we buy those stocks over here. Okay, now some of you would then ask, Terence, what if come to the option expiry that you're selling, the stock goes down, now I have to buy those stocks? Yes, that's precisely what we're going to do, because this is a portfolio approach. So, if the responsibility kicks in, okay, and you are not within our community, so you don't know how to deal with it, so that's where the cash secure puts comes in, right? You actually have the cash, sitting in your account to actually pick up those shares. So once we pick up those shares, which is how we're going to track this portfolio over here, then we're going to turn around and perhaps sell some call options because now we own those stocks. All right. So if you own stocks and you are trying to sell call options, that strategy ultimately becomes covered calls. Right. So this is a very simple strategy, but yet, with a very simple approach like this, right, you could still be able to create what we call double-digit returns, okay, from building a portfolio doing this. Okay. All right. So it's to really show, the general investors out there that creating a double-digit portfolio is actually simpler than you think it can be over here. Yeah. Okay. So let's get started over here with tonight's session. Okay, all right. Thank you very much for joining us. All right, Sirjun, hi. All right, hi, Jacqueline. Hi, Shalana. All right, hi. All right, hi, Vincent. Okay, all right. So great to have all of you over here. So if you want to share this out, all right, please do so. All right, so click on the share button over here. All right, and then to just have the video shared out over here, so your friends who are trading the U.S. markets, all right, will be familiar, all right, and will be able to get on such trading opportunities as well. Okay, all right. So today's company that I want to be talking about, right, it's actually this company called Unum Group. All right, Unum Group. Okay, now, so it's not every single time. Okay, let me just change my screen share over here. Okay, so it's not going to be every time where I'm actually going to be sharing stocks that we discuss, all right, over the weekend segment that I do with Jeremy. All right, so we discussed this company called CVS over on that episode, right? But I'm not going to bring it forward over here into this series because I'm actually doing a trade on a different stock altogether tonight. Okay, so do join us on each week's episodes for both different days because they'll be covering different stocks potentially over here. All right, so today we're going to cover this company called Unum Group. All right, okay, Unum Group. Okay, now, so why do I like Unum Group over here? First, let me discuss a little bit about the company if you're not familiar. All right, so Unum Group is actually an insurance holding company. All right, so it's an insurance company, insurance holding company. Right, it provides a broad portfolio of financial products, of course, as we know. Right, so it basically operates through, all right, what we call these entities over here: Unum US, right, Unum UK, all right, Unum Poland as well, all right. And something that we are probably more familiar in this part of Asia is this company called Colonial Life Businesses. All right, so we probably have heard of this company called Colonial Life Insurance over here. Right, so that's something we could associate with, but all these are all tied up with the holding company called Unum Group over here. Right, so they basically provide your typical stuff like disability, life, accident, critical illness, right, dental, as well as vision, insurance policies to tons of customers basically. Right now, so what I like about this company is really down to a very simple philosophy. Right, it has been sold down. Right, like as we realize anything to do with financials over here. Right, or businesses dealing with financials have been sold off amidst the COVID crisis or the COVID market correction, right? And this is also the only sector until right now that hasn't recovered from those lows over here, right? So they're actually still way off their highs before the market correction actually happened, right? Now, so one good thing about this company over here is, as we know, if you are an established insurance business and insurer over here, you have what we call competitive advantages that are difficult, right, for others to actually break down. Okay, so most of the time, right, when it comes to insurance policies, customers are always what we call very price centric, right? That means they're always looking for what we call the best deal over here. Okay, but Unum has kind of developed what we call top position in its industry. All right, with a track record of providing reliable services as well as good relationships with their customers. Okay, all right, so there's one great thing that they have over here, right? And they have been posting what we call increased profitability over here over the last couple of years. Okay, now let me just quickly scroll down over here. All right, so what you can see over here is if you look at the earnings per share of the company. All right, okay, the earnings per share, all right, it has been on an upward scale over here, all right, barring 2018, of course. right? That may be some business sectors write-off that they have, right? But since 2015, right, you could see that they're steadily increasing it over here. Of course, the last 12 months, they are now being impacted by the COVID crisis. So we are, of course, expect some impacts from that, right? But it's still posting a very strong figure right now, despite the impact compared to other businesses. Okay, one thing I really like over here, it's the PE ratio, right? The PE ratio of this particular company is really, really low right now. Okay, let's have a look at it. Right, give me a minute over here. I'm still waiting for it to load, as you can see. All right, now, so this is what we're looking at over here. We're looking at a company over here that is essentially very profitable, right? But is sitting at what we call, forward PE ratio of just 3. All right, forward PE ratio of just 3. All right, now, so many people would deem that PE ratios that are that low over here are what we call companies that are over the hill, right? Over the hill in the sense that they're no longer growing and they're just sitting on what they already have over here. But as you heard just now, Unum is not a company that's associated like that, right? So it's actually growing over here. So with such low PEs, we are basically expecting the stock price to actually substantially appreciate over here. All right, or at least we don't expect a lot more downside from this company. Okay, all right, so that's what we're really, really looking at over here. In fact, if you do some fundamental calculations, if you are a fundamentalist over here with us, right, you may actually find that a fair value of the company is actually sitting somewhere around $30. All right, and $30 was where it was kind of sitting before the market correction actually kicked in. Yeah, okay, all right, now, so we're sitting on a very, very deep discounted company over here in terms of what we're discussing right now. Okay, all right, now, let me just get the standout point that I want over here. I'm not catching it right now. Give me a minute. Okay, all right, yes. Now, so basically what's happening over here is Unum is actually producing or, growing their earnings per share on an average of close to almost double digit each and every year. All right, now, so because of that over here, right now, what we're seeing right now is it's a very difficult market. Right now, what do I mean when I say a very difficult market? Because looking at what the market has done, since the March bottom over here, is the fact that it's almost recovered to the all-time high amount, right? Because the S&P I think was close to 3,400 before it started coming off, right? And right now we are already almost climbing back to 3,200 when the market opened today, right? Now, so will we see another corrective move? We don't know, right? But a lot of these sectors, mainly technology, has led the forefront. Technology is actually up the entire year, right? Despite the correction. Right, it's actually up by almost 20% this year itself, right? Despite the huge crash that we've seen, right? So they are leading the entire sectors in terms of performance right now, and we have also seen consumer staples and many other basic industries. Their stocks have also recovered to almost the all-time high, right? Leaving really the financials with a lot of catch up to do. Right, so financials is a place where you really want to look for the bargains right now, all right, in terms of very high market all over again. All right, so the only problem with financials is a lot of banks are actually hit during this period of time as well, and a lot of people don't expect them to perform really well because if businesses were to start writing down bad debts over here, all right, the banks are actually the one that are left holding this basket. All right, so with decreased earnings by the banks over here, all right, you expect the stock price to be compressed downwards even further. All right, so this is why the banking sector stock prices have not actually escalated like the rest of the industry. All right, there's not a lot of positivity going over there. Yeah, okay, but Unum is definitely something we can look at over here, right? With such a low PE, all right, and be the price being at a depressed level, which is something that's not very expensive right now at $16 a share, right? So I'm looking for a long-term positioning over here, all right, a longer-term positioning in this stock. Right? Why do I expect to take a longer-term positioning? It's actually a simple understanding, right? Because just like what I said over here, we can probably expect the market to do what we call a near-term correction move, right? Before maybe after that resuming the uptrend again, right now. But I don't want to be caught, in the near term if I'm entering a trade and then immediately going into the correction phase immediately after that. So I'm looking at a more longer term outlook over here, trying to sell an option that expires over a longer period of time to kind of ride out in case the market goes down and then starts coming back up again. All right, now, so let's look at what we have and what we can do over here with Unum, all right, as a trade over here. Okay, now, yes, thank you very much for. Hi, Isaac. All right, hi. All right, now, thank you very much, Uncle Fu, for addressing the question for me. All right, so for those of you who do not understand, PE ratio is basically stock price divided by the earnings per share. All right, so if you take the stock price divided by earnings per share, then you'll realize, all right, this is a number where actually the lower it is, the better the valuation of the company is so-called over here, right? But you also want to compare it together with the similar company in the same industry, all right? That will give you a comparison over here of how cheap it actually is. For example, right now I think we have S&P sitting close to about 20 PE. All right, so it's normal average, long-term average where it's fairly valued. It's usually about 15. All right, so anything above 15 is usually considered overvalued. Right, so the S&P right now is actually overvalued as a whole. Right, but we have great companies like Unum right now that's sitting at 3. All right, so that really shows you how deeply undervalued Unum as a company it really is. Okay, now so let's go ahead with the trades itself. Okay, all right, so let's move ahead right now. I'm going to take you to the platform. Okay, all right, now, so let's look at Unum as a chart as a whole over here. All right, so if you see Unum now on my screens, all right, what you will see over here is something very simple. All right, like I said, over here it was trading around $30, which is where its fair value is. All right, you could see, all right, it was a stock that was very, very stable. All right, it was a stock that was trading with a lot of stability over here. Oops. Right. All right, it will start with trading with a lot of stability at a high of about $30 over here, right, and then a low of about $26. All right, so it has what we call a range right now of about $4. Right, a simple range of about $4 over here. Right, it's very, very tight. All right, and for almost half a year, right, for almost half a year it was trading within that range itself, only to break when COVID really escalated. Right, so COVID brought a lot of concerns for financial stocks as well as insurance stocks over here because there's a lot of unknown, of course. Okay, now, but of course, as it broke down over here, it broke down to a low of almost $10, right, and then it has since steadily recovered over here, right, from the bottom, of course, as we see. Okay, from the bottom, as we see right now, we can see an uptrend that's going in place. Right, so the stock rebounded, it came down from this low over here, which is a higher low, of course, right, and it tried climbing to a higher level, all right, and it came back down now for another correction, right, and nicely sitting on this uptrend support line that we're seeing over here, right. So this uptrend support line has a bottom of $15, right, $15 over here, right, and then of course the last support was actually at 1280, all right, high low, all right, okay, high low, right now, so 1280 over here. So what I'm really looking at, right, it's obviously the low it's substantially much lower. It's like $10, all right. That's a little far from where we are right now. But I don't really have to go such distance for a bargain over here to get a really good trade. I think if I can buy this stock, right? If I can buy the stock anywhere, in the next half a year at a valuation of $12.50, at a valuation of $12.50, I think that's a very, very cheap price to be holding on to such a company over here. Right now, why do I also say that? That's because this company is actually paying dividends, right? This company is actually paying dividends right now, right? Let me see if the dividends amount is over here, right? There we go. Right, the company is actually paying up to almost 28.5 cents per quarter over here. Right, it's paying 28.5 cents per quarter. Right, that also means that we're getting almost close to over $1. All right, we're getting over $1 over here for a year from this company. Right, and that puts this deeply undervalued company, right, with a dividend yield of almost close to 7% as well. Right, so you can imagine this, right, that income investors in America, right? If they're looking for great companies to put in right now to create dividend income, right? This is definitely one company they can be looking at over here in the long run, right? And if I actually end up buying the stock at a price of somewhere around $12.50, right? $12.50 over here. That would mean, right, that if my customer makes me buy those shares at $12.50, all right, my dividend yield is actually going to be much higher, right? The moment I buy those shares over here. All right, now what do I mean? All right, let's quickly have a look over here. All right, 0.285 times 4, right? That will be the dividend I expect to receive in the next 1 year, right? If I actually hold the stock, right? So that's like, $1.14 over here, $1.14, right? If I divide it by, the $12.50, all right, which is a put option I'm looking to sell over here, right? That will put my dividend yield, all right, at almost 9% if I'm actually forced to buy those shares at $12.50. All right, and I don't think I'll be complaining too much if I end up paying like $12.50 to buy a share, right, which will be about $1,250 for 100 shares over here, right? And actually start creating close to double-digit passive income, all right, from the start of owning it, right? So that's not really going to be a complaint for me over here, right? And that still leaves a lot of upside on the stock itself in the long run, right? Because the stock is fundamentally sound as well. Okay, all right, now so let's move on right now to look at some potential trades, right? The trade I'm looking at selling today, it's going to be the 12.50 December expiry. So it's going to expire on the 18th of December, which is about 158 days from now. I'm looking at a 12.50 strike, right? And I'm trying to get it done over here for about $1.10 to $1.15, all right? $1.10 to $1.15 over here, all right? So that's what I'm looking at over here in terms of this trade. Okay, so give me a minute. Let me just pull up a quick PowerPoint presentation so I can show you how this trade is going to look like over here when it comes to actually doing it. All right, great. Okay, let me switch out the screen. I'll come back to this later. All right, now, so I have a blank screen over here on my PowerPoint slide. So let me just elaborate what's going to go on. Okay, so the stock right now is trading at 16.46. All right, it's neither up nor down for today. All right, I actually expect the market to open stronger, but possibly turn to close negative by the end of trading session today. All right, now, so what we're doing over here is we're selling a $12 put option that expires all the way out into December 2020. All right, now I'm expecting to collect about $1.15, right, in terms of premium. All right, so this is going to be a credit over here for this trade. Now, so let's take a look. 3 things can happen, all right, if we enter the trade today. If the stock starts going up, all right, then I could just wait all the way to December and then just let this option lapse or let this option expire. All right, okay, or if you know how to sell options over here, you could also manage the trade by closing it early. Okay, now the second thing that could happen is the stock just continues to sit where it is all the way until December. All right, so the option is still going to expire worthless, right? Because what do you get with this, right? You get to buy the stock. Okay, with this put option that you're selling, right? You get an obligation to buy the stock, but you only get to buy it at $12. So what it essentially means is this, right? You have to think, is your customer, right? Is your customer actually willing to sell you the stock at $12? Right now, and under what circumstances will the customer be willing to sell you the stock at $12 right now? And obviously, that's a very simple fact, right? The only time where the customer is going to sell you a stock at $12 is when the actual stock market price of the same stock is below 12 itself. So that means when the stock is sitting at $16 in December, right, nobody's going to do anything, right? So the option is going to end up expiring worthless, right? And you're going to get to keep the $1.15 that you have collected. And you also get to repeat the same trade possibly again, right? Now, another thing that could happen is, of course, if the stock goes lower, right, it goes to, let's say, $14, all right, okay, now that's still fine because the customer is still not going to make you buy the stock at 12. 12 is still a deeper bargain than 14 over here. So they're not going to sell you the stock cheaper than what it is right now. Okay, I hope you start to understand the picture over here. Now, so because of that, this option is still going to expire worthless. That means you get to keep all the premiums, just like what insurance companies always do, right? They sell policies. If the customer doesn't make a claim, right, they just keep all the premiums when the policy expires, right? Now, and then look to sell another policy again. Okay, now, so the only threat over here that we will have, right, it's really, if the stock price crashes, right, and it crashes below $12, right? Now, then you'll be obliged to buy the stock at 12, right? As we've seen earlier as well, right? The stock has really hit a low of about $10, right? Hit a low of about $10 over here, right? During the COVID crisis. So, $12.50 isn't too bad a price to be looking at over here, right? Now, let's stretch this a little bit further. If I stretch this all the way out to 3 years over here, one thing you'll be seeing is, all right, it's even the 3-year low that you're looking at amidst the COVID crash. All right, so that's a really, really, really deep undervalued price that you're looking for such a company over here. All right, now, so moving forward from that over here, once we establish this really deep bargain price, right now we're going to go ahead and place this trade and place this order. All right, so right now it's about 105 and 115. All right, the market has settled, so I think we could get this done for about 110. Right, so before we do that, let's calculate our returns over here. All right, if I'm going to get $1.10, all right, credit on this trade, that's also going to be my profit, all right, all the way to December. All right, and what I'm going to do is I'm going to put up the cash required to buy this put option. All right, sorry, it's not 12, but it's $12.50. All right, okay, so I'm going to put up $12.50 for every $1.10 that I'm pocketing up front right now. Okay, so in terms of profits over here, all right, what we're looking at is 1.1 divided by $12.50 that I'm setting aside to buy those stocks. And you realize, right, you're actually going to pocket 8.8%. Right, you're going to pocket 8.8%, right, from now all the way to December, right, 18th of December. Right, and that's essentially just right about 6 months over here, right, because we got the month of July, all right, actually it's less than 6 months. All right, we got a month of, we're almost 18 actually. So we got a month of August, September, October, November, December, 5 months over here. So we are, about 5 months and 1 week away from this option expiring. Right now, so imagine this, if I could repeat this trade over and over again, right? So let's just do this. If I divide this out by 5 months, right, and then I multiply it by 12 months to kind of annualize the returns on this trade, we're looking at a return over here of about 21%. All right, sorry, let me just switch the screen so I can show you my calculations and you can see it. All right, so it's over on the platform on the left using the calculator. All right, so all I did over here was to take 1.1 divided by 1250. All right, you could do this on your own calculator as well, of course. That comes up to 0.088, which is actually 8.8%. All right, I divide it by 5 months over here. All right, and then after that, just multiplying it back by 12 months in a year. All right, that gives me 21.12%. All right, so this trade, on an annualized rate, if I'm able to repeat it over and over again, in the long run, right, it's actually going to produce 21.12%, right, returns or in terms of cash flow for me, right, by creating such a portfolio. And what's good about this portfolio, right? What's actually good about this portfolio is this, right? I don't have to bother, I don't have to worry if this stock is actually going to run up, right? Because if I'm happy with creating, a 20% return in terms of cash flow on my money over here, right, which is actually a really, really good rate, all right, if you look at compounding this in the long run, right, because doing so, you're actually matching Mr. Buffett's long-term average return, all right, okay, so that's a pretty, hefty and good performance you're looking at over here, right, so, doing so, right, you're actually looking at over 20% returns just doing a simple trade like this, right? So let's go ahead and place this order. All right, I think some of you jumped the gun, all right, jump ahead of me over here because I can see the last price done on this option is actually moving ahead, all right, moving ahead. All right, now, so I'm just gonna place the order and see, to verify that this is actually a trade that could get filled on the price that I'm doing over here. So let me structure the order, right? And if any of you have questions regarding the cash secured naked put that we're doing upfront right now, please leave your questions in the comments over here. All right, okay, leave it in the comments over here, and I'll try to address those questions that you have. Okay, all right. Give me a couple of minutes as I structure the order on my brokerage trading account. Right. So since the last done price seems to be 112 as someone has done it, I'm just going to attempt to do this at 112. Right, let's see if I can get it done over here. Right, it's not biting on me over here. Some of you are running ahead of me. All right, I can see the price changing over here. All right, that's perfectly fine. No worries about it. I just want to get the trade done and filled, right? So we could actually lock this down under our official portfolio, all right, with a price over here because, part of doing this segment is to really track the trades that we do over here, right? And, how we want to track the performance of this entire portfolio, right? So I'm not getting filled, right? But some of you actually are at 112, all right? Okay, now, so I'm just going to get this done over here at 110. All right, that's fine by me. So we could lock down the official price at 110. That's weird. Give me a minute. That's weird. The broker actually kicked out my order. Absolutely no idea why. All right, I see a question coming out of you, Kane. All right, give me a minute over here. See what happens over here. I think this option is a little bit more thinly traded. All right, so as more sell orders come in, right, you could see that the bid price for the 105 is actually pulled off. All right, and that's also coupled together with the stock actually getting back a little bit positive for today over here. All right, so let me leave this order running for a little bit, all right, while I address some of the questions and see if it gets filled. All right, over here, yeah. All right, now we give this some time. Okay, Kane's question. Let me get to that. Let me just put it up on the screen over here. So Kane is asking how much of the portfolio should be allocated to cash secured naked put options. Kane, please understand you are within our community itself, all right? You are a community member, all right? So when I run such a session, all right, it is basically for the purpose of people who are not within our community, all right? So we are only discussing cash secured naked puts. So if you are actually looking to build a portfolio doing such a thing, that means you're actually willing to hold on to those stocks over here, all right? Then, go ahead, set aside a different portfolio, all right, and they aim to do this, all right? Because this can be, an entire portfolio that you build up, all right, perhaps with 10 stocks or 20 stocks, taking on what we call a 5% exposure in each of these stocks over here. All right, so it could be 5% from last week that we did over here, if I'm not wrong, on KMI. All right, and then another 5% on today's trade, which is on UNM over here. All right, so this could be something you want to look at over here. Okay, all right, now, so it is totally separate from what we do in our community. That means in IMP community. So we typically enter a different strategy and different trade. So if you want to look at structuring such a different trade on the stock as well, all right, you are more than equipped to do so. You know what our strategy is. Go ahead, calculate the returns if it makes sense. Go ahead and do that. Right? It doesn't mean you have to execute the cash secured naked puts over here. Right? It's the benefit for people who are not within our community over here. All right, to join us. All right, and be able to create some cash flows immediately as well. All right, while they decide if being an option seller is actually one of the best paths to creating a sustainable returning portfolio for themselves. Okay, all right, Kane, I hope I answered your question. Will, all right, Will, welcome over here. All right, why not date it 12 months? Any reason for 6 months? All right, there is, Will. All right, I'm limited by choices. All right, as you can see over here, as I close up the December option, right, can you see because it's not a very highly option traded stock, right? There are limited expiries being offered on the stock, with the longest dated one only available to December, right? So I'm trading the maximum of what I have over here, Will. All right, I'm trading the maximum of what I have, Will. Okay, all right. I hope that simply answers your question in a very simple format. Okay, all right. So if I had a longer period, I think I may look at it, but because that's what I have available right now, that's basically what I can get actually. I can't get my order filled. Too many of you jumping my gun over here. All right, anyone else with any questions while I work on the order and try and get it filled? Ryan, must be you, right, Ryan? It must be you. You see, we went from 112 and then we went to 111 and 110, and then now the last time price is 108. That clearly shows some of you are jumping my gun. All right, and I'm able to find this out, guys. All right, now let me see, Ryan. Oh man. See, guys, 20 of you, all right? 20 contracts have been out there and done before me. All right, there are 20 contracts that are done. All right, yes, Uncle Fu, you can do that as well. All right, if you intend to create a portfolio owning the stocks, this is definitely doable as well. Okay. All right, Ryan, can you just verify that you actually got the trade filled at 112 over here? All right, as I was discussing it. All right, that's okay. I've got it filled. So that's okay. Give me a minute. All right, great, Ryan, great, no problem. Suwani. Now, remember again, this is a public session over here. So for IMP members, you can restructure the trade to do it as an IMP put option rather than cash secured naked puts. So I will leave you to decide how you want to design it. Okay, for the purpose of Cashflow Live with Terence, I'm only going to do naked puts over here. Okay, all right, so only naked puts will be discussed in these sessions over here. Okay, so let me just quickly switch the screen so you can verify that the trade was done live, all right, and it's actually a failed order. Okay, all right, now, so the trade is here, or if you can verify it right now, I'm just gonna make the screen a little bit bigger. Okay, so I've just sold the UNM. All right, UNM, it got filled at 9:14 over here, so that's about 2 minutes ago. All right, 2 minutes ago, the 12.50 put, I sold it over here for 3 contracts at 105. All right, so I lowered the price to 105 over here just to have an official price to lock into the portfolio. All right, so 3 contracts over here at 105. Okay, all right, now, so Ryan got it filled at 112. That's great. Okay, all right, no issues over here. I'll just put it under the official portfolio at 105 over here. Okay, all right, 105. So let me jump over right now to show you our portfolio tab, so we can verify the performance of the portfolio as we go live over here. Okay, now, so this is the Excel sheet. The first trade we did was last week over here, entered on 7th of July. All right, we did the KMI naked puts for 13 strike, September expiry. Okay, we can track it later, all right, to see what is it trading for today. Okay. Okay, so I'm just gonna add in the second trade right now. I'm also gonna do 3 contracts today, as you saw. All right, today we did it on UNM, which is Union Group, the naked put for 18 December expiry. Okay, and the strike is 12.50. Don't minimize my decimal. All right, 12.50. All right, and today's date is 13th of July. All right, and we did it for 105. Okay, 105. Right now, so we have 2 trades over here. All right, so as we continue to do this, what I'm going to do is I'm going to establish what I call a 20 stock portfolio. All right, a 20 stock portfolio. So you could allocate, up to 5% exposure on each stock over here, because at 5% exposure for each stock on a portfolio times 20 stocks, that will be 100% of my entire account utilized over here. All right, so week by week, as we add the stock, all right, just assume I'm going to take a 5% exposure with each stock over here. So if I traded this for 3 contracts today at 105, all right, let's just quickly calculate how much cash flows we have created. There will be 3 option contracts times 100 shares of each option contract times $1.05. Right, I've just created $315. Right, $315 in cash flow over here. All right, in tonight's session. Right, so we have created $315 tonight. Right, and I believe we have created also $100 plus, 49 cents. Oops. Right, for KMI over here. So in total right now, in the last 2 sessions, we have created $462 US in cash flow, right, in our Cash Flow Live with Terence sessions over here. Right, so that's episode 2. Right, and so far we have collected 462 US dollars. All right, I'm just going to put 462 over here. All right, so we've collected 462 US dollars. All right, when our options will expire over here. And actually, even if we are forced to buy those shares, these cash flows are ours to keep. All right, so just like any insurance policies, once the insurance collects your premium, he's not liable to pay you those premiums back. All right, so in our case, if we have to fulfill our obligation, we just buy those stocks. Okay, all right, now, so I hope most of you are still with us in this session. Got a clear idea over here. All right, so I think YC is just asking, all right, if you're going to do a covered call on this, what call option strikes are you going to sell? All right, so let me just quickly give you an idea to seed in before I end the session. For call option, your obligation when you sell it, it's actually taking on an obligation to sell the stock to someone. All right, so if you are buying the stock today at $16.50, all right, then you have to assume, all right, what kind of a price do you want to sell the stock away at? Okay, so you could probably look at $17.50 then. All right, $17.50 all the way to December pays you close to $190 as well. All right, so that's a pretty good deal over here as well, with a $1 upside on the stock. right? And you get to pocket almost $1.90 upfront as well. Okay, and along with that, I think it will be two dividend payments, right? With the next one coming up on the 24th of July, all right, 24th of July, then 24th of October, all right, October, then it will be January. Yes, two dividend payments. Okay, all right, now. So that's what I want to discuss over here in a typical session of Cashflow Live with Terence. So I hope you enjoyed the session over here. So it's just a quick one, 2 trades in 2 weeks and 2 episodes over here. If you have not invited your friends who are trading the US stock markets already, or who are looking to create simple portfolios over here with double-digit returns, right? As an option seller, a very simple affair where I actually took most of my time discussing and verifying the trade rather than placing the order. Right, I took about 10 minutes over here to place the orders and get it done actually. Right, so a simple double-digit portfolio in under 10 minutes or 15 minutes each and every week. Right, so that's what we are going to aim to do over here. All right, thank you very much for joining me. All right, if you have not clicked the share button on the videos, please go ahead, click the share buttons over here. All right, and if you're new with us over here in tonight's session, if you're new with us and trying to find out more strategies that we are doing over here, please head over to our website, www.impossibleinvestors.com. All right, you would see this button called Project Options Cashflow, where we have a 30-day series to educate investors on option strategies as a whole. Okay, all right, so you can pick up different option strategies and learn if you're totally new with us over here. Right, or if you have not done so, add yourself to our Telegram channel by scanning the QR code that you see on the screen as well, or simply type the address over here in your web browser and have your Telegram app launched up after that. Okay, that will get you notified when we run our sessions live each and every week over here. All right, now so also do join us on the weekend sessions where I do it live with Jeremy, where we discuss a stock that is fundamentally sound. All right, and discuss the possible trades on it as well. Okay, all right. I'm just going to pick up one last question before I end the session officially. All right, now, so when the stock is assigned, does it eat into the margin? All right, Anthony, for this particular trade over here, it's a cash secured naked put. All right, so I'm ignoring whatever the broker tells me I need for this trade to be open. All right, all I'm doing is I'm setting aside $1,250 for every one option contract that I'm selling, right? So in my trade over here, if I'm selling 3 option contracts, that will be 1,250 times 3, all right? 1,250 times 3, right? That's how I'm setting aside for this particular portfolio we are building, which is called Cashflow Live with Terence. Okay, all right. Now I hope I addressed that question over here. All right. Thank you very much for joining me again in today's live session. All right, we locked down our second live trades over here, and I look forward to seeing you next week. All right, so do join our Telegram channel when I'm going live on that day itself. I'll be informing all of you earlier in the day, so you'll be notified and set aside time to join us live when I actually place these trades live together with you. Okay, thank you very much. I'll see you again in next week's episode. Bye-bye, everyone. Good night.